So when people ask, is there an out? I think the honest answer to tell people is no. If we stay in this present state, there is no out. And that's what we're going to be facing. And that is part of the reason I'm not skipping, but it is a key reason why not only was I a roaring bull on gold, and despite the rise, I believe it's a significant part, along with the BRIC formation, on why gold has done what it's done.
Hello and welcome back to Soar Financially, where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining guy on Twitter and the CEO of the Soar Financial Group. And as you can tell, I'm back in my studio. I'm back home. I'm back in Germany. Excited to be back because got the proper setup and everything, and just the proper lighting. Doing interviews from hotel rooms are never fun. Although it's like I like doing them on the fly, but the lighting is always terrible. Audio, I think, was fine with the last interview, but I hated the lighting. The orange light, I just couldn't get rid of it. So now you get the studio experience again. Appreciate you joining us for a fantastic discussion that we have lined up for you today. It's with Peter Grandich. He's a financial commentator and he works at, of course, Peter Grandich and Company. And we've had him on about 12 months ago, right when Silicon Valley Bank went belly up and gold moved to about $160 within a very short time frame. But that was from 1760 to 1930. Now we're trading at 23.25 an ounce, and a lot has changed. So we have to talk about how has the macro picture changed? Why is gold moving? Is the gold move sustainable, of course? And what about the miners? How happy are we with the recent price moves? Have we seen any? And where should we be looking for returns? And before I switch over to my guest, quick reminder, hit that subscribe button. It helps us bring guests like Peter on, and it helps us, grow the channel, add more visibility, and of course, get the right guests here on this channel. Thank you so much for that. Now, without much further ado, Peter, it's great to have you back on the program. It's good to see you.
I'm glad to be back. Thank you for having me again.
Absolutely. We have lots to talk about, Peter. Let's dive right in. Since it's been 12 months since you've been on the channel, I'll start with a very general question, Peter. How strong or how confident do you feel about the economy these days?
I don't think you can be too confident in it. I do think that there's been a massaging of employment numbers that has given probably more strength than reality. And I also think people are only first now realizing that inflation, once that inflation genie gets out of the bottle, and 2 years ago it got out hard, it's hard to get her back in. And I think it'll take a lot longer and more tightening, which I don't think the Fed is prepared to do, to really get it down. I always think that 2% and 2% was a foolish number to even talk about, as much as transitory was. So I just think that it's muddling along. I think the political environment going forward, especially what's happening on the social scene here and around the world, but particularly here, is going to play more of a focus. And when you tie that into an economy that's not going in the right direction for the average American, it's going to put more political pressure on the current administration. And it looks like they're about to do anything, and they may have not done everything they could possibly do. So I think we could have some more fireworks on the political side of things as we get closer to the election.
We'll have to dive a little deeper on that, Peter, on the political side, but because I want to know what they can do and what the impact on the economy, of course, could be. But let's table that for a minute, because I want to talk about a stagflationary scenario, or the stagflationary environment that we are currently in, or it seems like we're in. Yes, the economy is still growing, but much slower than expected. And inflation is rising much higher than expected. You mentioned it as well, but we got some PCE numbers last week, which came in higher than expected. Would you subscribe to a stagflationary environment right now? Is that the right term to use already?
Yeah, absolutely, because it's perfect when an economy is slowing down, which it clearly is. Some will argue it's in recession, some say it's not. But I think the important thing to understand about that is that we don't yet have a grasp. I think the financial service industry, or I call them the "Don't Worry, Be Happy" crowd on Wall Street. I really believe, I've been at this 40 years. You can toss a lot of them off the top of the Empire State Building, and all the way down, they'll all say the same thing: "Hey, so far, so good." So I don't think there's been a realistic look at the structural problems that America has. And they have five. I'm just going to name them to you because it made me take the most bearish stance I've ever taken since you and I last spoke. First is the the debt spiraling. That is just completely out of control now. Now there's going to be trouble paying the interest. The second is we have a retirement and an aging crisis simultaneously. 65% of Americans are working paycheck to paycheck. The third crisis, which really was number three when I started with this report at the beginning of January, now it's battling for number one, and that's an immigration invasion. And the reason I call it an invasion because it's an economic invasion. The toll that's going to be taken, that's not even begun to really take place across the nation and individually in small towns and what have you, is only first starting to show now at a time when we could ill afford more economic woes in the United States. The fourth is the BRIC nations. I think this is the one place where Wall Street has really, really blown it. They have underwhelmed their view on something that I think, when it's all said and done, it's going to take 3 to 5 more years to really get to the level I think it can get to. But I think what BRICS do to world trade will be the same influence that the Industrial Revolution had to world trade. And then finally, the fifth, which I started to touch on, America is in political paralysis. Both parties cannot work with each other at all. But now each party has a splintering way more far away from the center of each party, which is troubling. It's going to make impossible, I think, or nearly impossible is the safe way to say it, to any real good work to be done to handle any of these problems I just spoke of and others.
No, I appreciate that. Thanks for that, Peter. Just really curious. We'll have to get a little more granular on a number of them, obviously. Let's start at number one. Let's start at the debt spiral, Peter. 34 and a half trillion dollars of debt. What is it? $1.1 trillion in service payments every year, like in debt service interest payments, which is an insane number. Like if you write that down with all the zeros, mind numbing. Absolutely. Is there a way out of it? Like Peter, like how do you see that developing and progressing? Like we're in an election year, maybe we can combine 1 and 5 here, but none of the candidates is talking about it. So I'm curious to see, like, do you have a solution for the debt crisis, and like, how is that going to sort of escalate?
So in my 41st year, I never honestly, on my hand on the Bible, ever imagined we would talk as financial commentators about things in the trillions. And now we have 34 of them. And our Congressional Budget Office, which is really the last place in Washington that has any resemblance of bipartisanship, has now said we're going to be at $54 trillion in that debt in less than 10 years. And you don't have to be a rocket scientist to do a little math to understand how severe the problem is. Let's just say that for the next several years, interest rates only average 5%. I don't think that's a large number, given the fact that inflation's a lot higher than what government have massaged down. But 5% interest rate, I think, is a good bet to average over the next 5 or 10 years minimally. Well, you start adding 5% on a 54 trillion debt, and you're almost at $2.7 trillion in interest payments. Kai, 2 years ago, we had our best year ever as a government. I think it was $5.3 trillion in revenue. We'd be having over half our revenue. Now, there'll be some revenue growth, hopefully, but we'd be talking about interest expense almost at half of all the monies that's coming in, not taking into account all the other issues that we haven't even got into. So it's a non-starter. So when people ask, is there an out? I think the honest answer to tell people is no. If we stay in this present state, there is no out. And that's what we're going to be facing. And that is part of the reason I'm not skipping, but it is a key reason why not only was I a roaring bull on gold, and despite the rise, I believe it's a significant part, along with the BRIC formation, on why gold has done what it's done.
We'll get to reasons of the gold price move here in recent weeks, or what is it now, 2 months now, in a second, Peter, because I think that's a really important topic to break down. CBO, the Congressional Budget Office, also within the same report, came out with 144 trillion. We want to throw some bigger numbers around by 2053. So every American will be indebted by at least $1 million US. American household, not American, sorry, American household will have a debt of at least $1 million if you were to divide that government debt by households, which is an insane number.
I think people should take a breath, Kai. Seriously, I say this, smell the roses and say, how the heck are we going to live with that? Well, and like you asked, what are the solutions? Well, the the almost certain solution, the one to bet on, is they're not going to accept a horrible deflationary environment, because they could have done that. The last hope, the fail safe that failed, was 2008. A lot of people were hard there that we should have went into a deep recession, if not depression, to really restructure things. There was still some people working within the political environment that was trying to bring the budget deficit within reins, stop the spending. That's all gone. There's nobody. You're not going to hear any of that on any political scale in this election. And yet I have it at number one, because it is the number one overwhelming negative that we face here in America.
No. I don't know. It's like this is a discussion. Like where does the spiral end? Like it is a death spiral, quite honestly. But then again, I look at Japan, and I keep bringing this up. Like our regular viewers know that I keep asking about what happens if the U.S. turns into Japan, and you brought in the BRICS nation, so we can talk a bit about currency. Like, is the U.S. willing to sacrifice the currency to keep going on like they are, and maybe to reach Japanese levels of 250% debt to GDP as well? Is that something you see? Like, is that even comparable?
Well, this is where I give the Fed credit. I don't give it for its actions, but they're not dumb. They're very smart. They see this. We're not smarter than some of those people that are sitting there and all. Okay. Now, they can't say certain things, but some of their actions, I think, is going to be very, very concerning. Even Trump, in his political stuff, has talked about trying to rein in the Treasury and the Fed if he's elected again and all, and that the president should have direct response. One thing that's happened, it isn't discussed a lot, guys. It's clear the Fed and the Treasury have merged. They were supposed to be two separate parties working in the best interest for each of them, and they really have become one now. And I think at the end of the day, the flight out of the dollar, the cheapness of the dollar. Remember, if I'm right about the BRIC nations becoming more and more of a dominating force, at least on a regional basis, and some sort of alternative trading currency, or some way that they decide to go about it, weakens the use more of dollars. Those dollars are still in existence. They just don't disappear. They come back here, and we'll have that many more dollars, which will help even cheapen the dollar more. So I like to have a good scenario. And I don't sell anything that benefits from all of this type of stuff. When I have this kind of talk in our planning group for retirement and estate planning, most people want to leave the room. We don't even get to the part about estate planning, but it is something I think is a reality. And I think we need to recognize that and prepare for it. And hopefully, some of us that prepare for it, we're all going to be impacted. There's going to be no way to escape this totally unless we, go to another area of the world or some island somewhere and all. But I still say 90 to 95% of Americans have no real concept of where we're heading.
No, it's just like I tend to agree. Like, and people don't feel it yet. Like, and I don't know. This is going to probably send off a lot of comments here, and I do want to hear from people that are feeling a potential recession or stagflationary environment. I want to hear about that in the comments, because I can use that for questions of our guests. So please put that in the comments below. We do want to hear from you how you're feeling, maybe a recession in your sector or so. Please, would be great. BRICS. We need to talk about the BRICS, Peter. And like I mentioned currency already, but what type of developments do you see in the BRICS? And you mentioned a time frame of 3 to 4 years, how that is developing and how they're establishing themselves. So I'm curious how you see that being part of the competition and part of the serious issues that would lead to larger issues in the U.S.
One of the smarter men that I've met over these last few years, Andy Schechtman, has used a description to say the BRIC is going to be drip, 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 boom. And that's exactly how they're approaching it. They're not going out and beating their chest. They're quietly and with reservation going about their business. And I always tell Americans this when I speak to them. You have to understand, even if it doesn't only reach half of what I think it can be, these are countries that at one time would have been trading with the United States and would have been actively using our systems and our currency, and won't. So take that off the table. That's not going to be something that used to be counted upon. And I try to explain to people, and all, you don't understand if you don't travel and all. You're going to share. America isn't the loved Uncle Sam that maybe it wasn't a generation or two generations ago. So when you combine all of that, this is a big negative that really no one yet that I see in mainstream Wall Street, in the talking heads or whatever, spend any time on it. When it's brought up, they laugh about it. But meanwhile, more and more countries are looking to be involved. More and more, obviously, listen, I don't want to jump on you, but it's key to answer your question. Someone or some group bought a lot of physical gold for something more than a trade or speculation. I got to believe it's a combination of wanting to get out of things that are dollar denominated, and also that there's going to be eventually a need for gold to back something, because new fiat currencies, no matter who's in charge at that point in time, are not going to be accepted after all this plays out. And that's why, despite money flowing out of ETFs and all that, gold is rising, because some group or people or group of people have been willing to pay, and pay hard, to get large sums of physical gold. And that's the underlining story to the gold market that you're not going to hear in the mainstream Wall Street, because you and I both know mainstream Wall Street will always treat gold like kryptonite. They don't want to talk about it because it goes against what they make their living off of: financial assets, stocks, and bonds.
Well, it would really fit well the fear mongering, though. That the clickbaity titles that they usually get people with. So that would work well when you talk about gold at $2,300. Like, what could that mean, right? I think that would lead to some interesting headlines, or should lead to some interesting headlines, for the fear mongering and gloom and doom guys. Like, is that how they usually make money, with gloom and doom, at least on the news media?
Not in the financial service business. Cup half full is always better. The cup half empty was always left to what we used to call the hard money people at one time, when the big conferences and all of that, and that's been weaned off, including the horrific decline that we saw in the metals, and particularly mining shares, and of course the cryptocurrency world. Basically, people under 35 say, uh, they don't even want to even think about something like gold or something like that. They've been trained or led in a cult like atmosphere that there's only one thing that counts, and that's Bitcoin. And I call it Bitcoin, and I know that in itself will cause people to send stuff, but it is partly a reasoning to understand on what's happening here, and to understand what force drove gold up, when there's really no other place you can point to and say, well, those must be the people buying it, or that group is buying it for this reason. And so I think it's a tremendous story that's yet to be told fully. And I'm jumping, but I think after correction and consolidation, the price can only go higher.
Let's talk about the move in gold. Like, I've had guests on, like Willem Middelkoop last week, and said, "Well, the writing has been on the wall for at least 10 years." So my question, of course, is why now? Like, we've been right, for 10 years, and even a blind chicken picks a corn one of these days, I think, is a saying, isn't it? But why has it happened now? Like, we Peter, 12 months ago, we talked about those potential triggers for a gold run, and it hasn't really happened. It hasn't really broken out. It has broken out now. So the question is timing. I think we all know the reasons for it.
Well, I've been told, I've been described this by emails. It's a blind squirrel even finds a nut every once
There
in a
you go. That's the saying.
while. And
Might have been a German saying.
I've been called a blind squirrel more than once over 40 years. So the bottom line, I think, is, if you think about it, I got involved with gold when it was back at 12.50. I got involved not because I thought the world was coming to come to an end and I'm going to need a gold bar to get a loaf of bread. I got involved because of capital appreciation. In 2021, I took a very difficult stance. And quite frankly, if I was still in the actual money management business where I would do it myself, I couldn't even done it. I wouldn't have been allowed to do it. But I literally, for myself and for friends and clients of our planning group, if they so choose to listen, I said that I felt gold was going to outperform both stocks and bonds for at least 3 years going forward. And it did. That's the untold story. And again, like I said, I'm not a bullion dealer. I'm not representing a bunch of ways that gold makes money. But understand this: not only did it outperform over the last 3 years and 5 years, but since January 1st, 2000, gold has outperformed stocks and bonds for almost 25 years. You would think something that has done that much better, or at least as well, versus what most people spend time talking about would even get a little bit of coverage, but it hasn't. And that goes back to what I said earlier, that they don't want to talk about it because realistically, if gold's going to go up a lot, I'll tell you this, guy. I always say this now for, I don't know, 20 years sitting in our planning group. I tell people that, listen, I'm going to want you to buy gold and hope it doesn't go up. And they always react the same way. Why would you want me to buy something that you don't think is going to go up? Because what little you're going to own, if it goes up a lot, what you're going to still own a lot is probably going down. And that really has proven the case. It doesn't get the applause that it should get, given what it's done under what it's had to do. And part of that reason, and let's go to where proving that I am only human and put my pant legs one leg at a time, is because many of us who believed in gold, like me, also bought mining shares and went even down further the food chain to junior resource stocks. And for 2 years, as I scratched my head and watched a lot of money that I had made be lost on paper or actual losses, how could these shares be going down when the prices of metals are going up? And so gold has really surprised even the most ardent bulls. And I'm not talking about the people that always are. I mean, there's groups that are always saying silver's going to 300, gold's always going to 5,000. I understand that. That's their, they sell bullion and that kind of stuff. But realistically, you can see it in your talk is, wow, it really took off. And why? And that's, I think you need to focus on the why. This isn't something that went this way because it's just something fluky happened and it won't last. Something is changing dramatically, or people are anticipating it. And those people that are anticipated got a lot of buying power because they bought a lot of gold.
Fully agree there, Peter. And the question is, though, that sort of as a follow up to what you just mentioned, we've seen a lot of geopolitical turmoil in the world: Russia, Ukraine, Iran, Israel. How geopolitical is the gold price right now? We're trading at 23.25. Like, how much geopolitical air is in the, let's call it, in the gold balloon, right? So if we let some of that geopolitical air out, maybe Iran and Israel make up, that'd be phenomenal. Um, where would gold stand? Where would gold be trading tomorrow then?
Yeah, well, I tell you, I see us solving our debt problem here before Iran and Israel make up. I think that is beyond hatred. That is just a very sad human beings, and that there's certain groups that believe that their God, or the way they see God, actually wants other people killed. That's hard for me to accept. But to answer your question, the geopolitical realm of it, I don't think the natural problems that we've been used to own gold, saying, oh, there's going to be war in the Middle East or Taiwan. I think there's a fundamental expectation of a worldwide change in monetary and who will be the leaders in that. And that's why I view the BRICS as so formidable and should not be discarded as Wall Street's doing, because I'll just go back to this. This is too much physical gold. You see, if we saw gold going up and we saw a lot of the exchange traded funds increasing in dollars, and we saw a lot of people come in and saying they've moved assets to buy more physical gold, but the opposite has been happening. And the other interesting thing, and you probably had a lot of these conversations over the year, because I know you're one of the smart guys that do this stuff. Remember all the manipulation, or what anybody wanted to call it, that we would see that somehow the paper market didn't seem to represent what was happening in the physical market. They've been overtaken. Now, part of that reason is much of the physical trading has moved from London and New York to Asia. And therefore, they don't have the power that their paper market used to demonstrate. I don't think they'll ever go. I've called it the Crimex, not the Comex, and I'm not alone in that. But I've always said you got to treat them like herpes. Herpes goes away for a long time, but it never dies. It eventually tries to make a comeback. And they will, somewheres along here, try to take gold lower. I think they're even trying now, and they're struggling with that. That's why I think it's going to be more of a consolidation than a hard correction. But nevertheless, there's some reason that people are perceiving far bigger than you and I will ever be, or will ever hang around with, or be part of that group. But the bottom line is it was something dynamic, and I don't think it's gotten the proper recognition yet, even from some people that have been around, because we've been so used to being beaten up by being believers in it. And therefore, we cannot believe when Nirvana finally shows up. Nah, there's got to be something wrong here. What's the trick? Somebody's going to pull the rug on me, and that's still the attitude. Even some people that have had great gains. When I turned, just real quick, I know I'm going all the directions, but I think it's important. I turned around to our clients that bought gold at 12 or 1300 for capital appreciation now and said, listen, take 5 or 25% off the table. And a lot of them wanted to sell it all because they said, Pete, this is just too good. Gold's never going to stay up here and all. And then I go into what we just discussed and all. And it was hard to keep them in. So there's not a bullish tone yet. This isn't where everybody's calling up their brother and sister and trying to get them involved. Yeah, Costco and a few places are selling gold and people make part of that. But we haven't seen a real movement of general public and institutional interest yet to gold. And until that occurs, I don't see any reason to think other than corrections and consolidation that we've seen the best price yet.
Maybe to summarize, is gold a buy, hold, or sell right now?
Well, you always have to separate it. I think for those that are very, very concerned about safety and purchasing and living I think you always still have to own it. I don't think you should ever be without it. You own car insurance, you have fire insurance on you have home insurance. You don't want it to burn, but you want something to be there. It's certainly not as cheap as it was especially when it was 1650 and I was putting out these back up the trucks, because I've always had a target of 2536 because I had believed in this cup and handle formation. I'm sure you talked about it over the years that was forming, and when it breaks out, this was the target and all. But I do think that to get to the much higher numbers, there are people that talk about 10,000, 20,000. It's okay to think about that. But if we got there too fast, if you somehow saw the future, I don't know if our regular lives that we would be living every day would be worth having gold at 10,000, because it would cause something far worse than what we're used to or seeing to get to that kind of number, say in the next 1 to 3 years. It would be something really, really troublesome. Are there people hoping for that because they're willing to live with that stance just so they can make a score? Yeah, I guess there are. But if I said to you, if I had some control over it, I think we should be happy somewhere between 2,500 and 3,000 over the next 12 to 18 months. And something that we didn't talk yet, and something that I was able to not be Fonzie and say I was wrong about. And that was, I put a lot of emphasis into mining shares in my own portfolio and junior resource stocks. Until 3-4 weeks ago, that was looking like a really poor decision. But I think at 2,500 to 3,000 gold, I believe copper is going to 5. I think silver will get up to 30 and trade maybe to 35 or 40. There's a lot of money to be made in an industry now, Kai, and I know this is where you live and breathe, that 20 or 30 years ago, you and I could have been at one of the conferences we've been at, spin a globe, point our finger there and say, yeah, we can go mining there. Not anymore. The world has shrunk for the mining and exploration. And before big corporations put $1 billion or more into some place outside of North America, they're going to think twice for some of the things that we've seen happen. And it's going to take, like for copper, I think well above 5, because the grades have shrunk, the sizes of deposits have shrunk, and the risks have risen for these companies. If there's anything to be said about Peter Grandich that can be printed and stated, it's that he tends to be too early. But I go back to an old mentor of mine who said to me years ago, it's better to be 2 years too early than a day too late. And I think it's still early for the mining and junior resource companies.
Peter, my immature mind went to a very bad joke, so I'm not going to go there. Because you've given
I've
me the perfect.
I've gotten them all in emails already. So
you gave me a perfect setup there, Peter. But I'm not going to go there. It's like we're not going to put that on your tombstone either. So. No, I appreciate that, but we have to talk about the mining stocks, and of course that's where I'm coming from. And to be quite honest, yes, you mentioned like 3 to 4 weeks ago there was a bit of a change, maybe in momentum. We have seen a few more financings, but you might know I also run Orin Inc. We track the financings in this space, in the junior mining space. We have seen a bit of an uptick, but now the last 10 days, we've ticked down again. The bigger financings have disappeared. It seems like there's still no new money. It's still all the same money that's being recycled in our sector. So the question is, Peter, and you mentioned, oh, maybe at $2,500 things will be different. But just to challenge you a little bit, Peter, like we said the same thing about 2000 and nothing has happened really. The juniors are still in the doldrums. August 2020 was the only time where we saw a bit of a hurrah moment for like a few months. But other than that, it's been absolutely abysmal. And looking at my portfolio, that's exactly what it has been. So I'm curious, like as a challenge, like why should 2,500 be different than 2,000 or maybe 2,100 that everybody said, oh, that's the ceiling because that's the new all-time high?
I don't think it's going to be as much as price guy as it is. Let's look at some of the negative structures. Let's look at probably if you had to come up with hindsight, why has it been this way so far? Well, a few things. One, other opportunities came out. The folks that used to be focused in this area left for a lot of reasons. One, because they had to, because the industry just wasn't making money for them. Competition came along. Cryptocurrencies is the number one competition. We also have to understand that when no new money was coming in, like you'll know this, the big institutions and all, they might have kept an old guy like me on the desk and, okay, you just watch over what we still have, but you're not really going to see new money to go play with and all, but it's all over here in AI and technology and this kind of stuff. Then we saw just basically kind of hide and shell by the majors themselves, saying that, before we go out there and spend a lot of new money and get to the issues, we used to book too much debt and all. We're happy right now, just, making a little pick off here and a little pick off there. But I think what you still have to come to, and this is going to be the deciding factor. On one hand, the world, not just the United States, but the world in general is moving towards some sort of increased electrification. Now that story has died down compared to where it was a year or two ago, where it was just a slam dunk, all these charts showing going off the board use of copper and all this kind of stuff. It's come back, maybe not to Earth, but it's back in the atmosphere at least. And I think the reality is if you still believe the world is going to grow, you start to look at AI and the enormous electricity that it's going to need. There is going to be some sort of increased electrification that used to be, maybe not as much as it once was. And the fact that where you can go look for it, the sizes, the grades that have dropped, the cost, the political risk, the social risk and all, eventually there has to be that come into that because it just can't stop. And nothing's going to change that juniors go and spend the high risk money. 1 out of 10, maybe sometimes 2 out of 10 hit and find something that can be eventually developed into a mine. And then the major comes in and does its thing. Is it better than it was before? Absolutely. It was getting to the point where literally if we didn't see what we saw in these last 4 or 5 weeks, some of us might have had to think that somehow we are in the buggy whip business and cars are the new thing. But I think eventually we have to, and the place that people are going to look for is the junior market. And to be fair to some managed to do real well. Some major mining shares, Anglo Eagle, some are doing quite well. Even Newmont got down to when it was down to 30, I said, this is ridiculous. I mean, you just have to own it down here. But is it going to be that roaring thing that we were once used to? I certainly was. I learned one thing, and I think you agree because you're old enough to remember that. For whatever reason in the junior resource market, the bad times seem to last a lot longer. And the short times, even when they're good, we don't get a chance to plant our feet and sit back and go, because before we know it, there's a saying, if I may just say this, there's really only 3 stages in life: going into the forest, in the forest, and coming out of the forest. The only time life seems half enjoyable is when you're coming out. Well, I think that's the same thing in junior resource stocks, but you very rarely come out of the forest. You're always going in or somewhere's in there. But I do think just steadily here, as long as we don't somehow, I'm wrong, we crash back down to 1800 or something like that, then you're right. I can just see people going, whoa, it was that again. It was the old pull the rug from us. But I think as time goes on here and as we go through this consolidation, and also this guy, I think this is important. We're going to start to see rotation out of some of the more important things. Yes, the stock market went back up, but if you look at over 2-3 years, net, the average stock is actually lower. Yes, some of the big ones have moved. So we're seeing some rotation, and we're going to see rotation. I know this is going to cause trouble. Bitcoin isn't the cure all for everything. And as I suspect, after I've called after the halving, that was when the party was going to come to an end. And if I'm correct and it goes lower, we're going to see money flow back into these things. And that might be over optimistic. That may be somebody that's, speaking his book clearly. But I am quite confident still.
No, I appreciate you sharing your thoughts there, Peter. And too bad you said the B word. Now the bots are going to be all over the comments, but um, it is what it is, Peter. We can't change that. But I have two more topics I quickly want to tackle with you, and please take all the time you want. By the way, by quickly I mean it's just two last topics I want to cover with you. And since we're on the precious metal gold, we have to talk about silver real quick. Yes, it has outperformed gold a little bit, but it hasn't broken out by any means. Why do you think that is? Like, what is holding silver back? Because theoretically, it should be up 75%, not 30 to 35% in comparison to what gold has been doing in terms of gold, price move. So I'm curious what your thoughts are on that, Peter.
Well, other than Dave Morgan, because I'll always read his stuff, even though he's always stayed primary silver. I always thought he just loved it. He wasn't somebody who was just saying it because it sells. But I used to get beaten up by the silver bugs because I would always make a comment at the gold conferences that silver was like kissing your sister versus owning gold. Oh man, when I was done talking, guy, they just come up and just tell me all the reasons for it. But what's changed for silver compared to back then is the fundamental argument has gotten much better. A, much more industrial use than used to be. And B, the dramatic drop in supplies. 20, 30 years ago, when I used to manage money and talk to guys, they would say, well, silver's just a byproduct in what we're looking for. We toss it aside. We're interested in copper or gold or whatever. But the usage of silver and the availability of silver, and let's also understand this, if I'm right about this, I think people are going to think twice to go to certain places for it. Mexico used to be a place, if you said silver mining exploration, when I was managing money, that was it. You said silver and Mexico. Those were two words that come together. I don't know if a lot of people are going to want to run down there as much as they might have been also. I think silver has a better argument, or let's put it this way, the best argument it's had since I've been involved in it in 40 years. So I feel that we should treat all three compatible: copper, gold, and silver. I don't think one is dramatically better than another now based on their current prices and the outlook for fundamentals for them.
You brought up copper, and I do have to ask if you do expect a recession or even a depression, why would you invest any money into copper right now?
Well, I don't know if there's going to be a depression or a depression. I think we can see, as you said, I think the big word that be more discussed, and I was glad that you brought it up, is stagflation. I think that's what people are going to deal with. Economies may not be rip roaring, but governments are going to have no choice but to keep printing money. That's going to be their only escape. And that is going to prevent any deep, deep recession. But understand this, those were times the Dr. Copper argument. Oh, as soon as economies get weak, copper goes down because there was ample supplies of it back then. And there was readily places that you could turn on and basically in a few years bring supply way back up. That is not the case anymore. That is not the case at all. And quite frankly, that's why I think the BHP, if you're going after Anglo, we're going to see more and more because getting ample supply of it is very troublesome. And I keep saying that we're going to need a price above 5 to really start to and sustain it at that before they can go out and want to spend a couple of $1 billion on something new. And, one guy, if you followed over the years, say what you want about him. And, I think he can sell ice to the Eskimos, but Robert Friedland's been right about a lot of things over a lot of years. And he's been an ardent bull and has given a great case for it. And I believe his argument is an argument worth listening to. And that's another reason why I think, I'm staying strong on copper.
I appreciate that, Peter. Thanks so much for sharing that and your thoughts on copper. Like it's an interesting one because if you look at business cycles and copper shouldn't be rallying, but there are other dynamics at play here, as you mentioned, from the supply and demand side as well that we should be taking into consideration, of course. Peter, very last topic. How attractive are 4.6% 10-year bonds to you?
Well, in our planning business, My advice to people right now is, given what I think between now and this election, things are really going to get interesting. And I'm using a very nice word, interesting, to substitute what I really like to say. And I really think earning close to 5% in T-bills and CDs, and just for versus having an over aggressive stock or even corporate bond portfolio. I don't think people realize how much refunding has to come now for corporations at much higher levels, which are going to impact earnings and all, which a lot of guys on Wall Street aren't, and gals are not talking about. But I'll tell you one thing to watch, which has been real interesting. I noted it today in my own Twitter. The bid to cover ratios on the 20 to 30 year Treasury fundings have been some of the weakest in decades, which means they're having difficulty getting strong bids. So right now, the credit market is telling us that seeing substantially lower interest rates is not likely, because people would be jumping all over those and the longer end than the shorter end. And so therefore, I think it's a bonds or T-bills and CDs, not corporate bonds. Bonds in general are a lesser of two evils than general equities.
No, awesome. Peter, thank you so much for that. We're getting the refunding announcement actually later today. So we were recording this on Monday. What is it now? The April 29th. So sometime later today, we're getting the refunding announcement from the US Treasury, which could be quite interesting. And of course, it's Fed week. So we'll hear from the FOMC, or the, what is it? Federal Open? Oh, no, don't. Ooh. What was FOMC stand for? Market Committee meeting? Something. I'm embarrassing myself here, Peter. But we'll hear from the Fed and Jerome Powell later this week as well, which could have an interesting impact on the bond market, trading at 4.6% on the 10-year right now. So we'll have to see how that is being impacted. But I appreciate you sharing your thoughts. I think it is an interesting mix to the portfolio. Any closing remarks, Peter? When are the mining stocks taking off? Maybe let's use that one, because that's how I make my bread and butter, and let's give people some hope, maybe.
Well, first, generally, I established for myself, after losing large sums of money not once but twice, about 20 years ago, I adopted this and I live it now. Less is more. I think if people have that attitude, capital preservation now overrides capital appreciation opportunities. Doesn't mean you stop trying to make money, but you need to focus as much, if not more, about preserving it for a lot of reasons that you and I discussed today. I'll just say this. There are some really great companies that are still doing some great things. A good friend points this out to me, and he's right. You can change management, but you can't change geology. So I think critically, where you are and what they got is going to be more critical than ever for what money is still looking at the juniors. And I think that only comes from proven experience. You don't get a discount by unfortunately, some person that just graduated and became a geologist and is running a company versus somebody that's running a company that's twice before been real successful. I think of a man in Vancouver, and I'm giving him a plug because he's one of the best people I ever knew in the business, of Randy Turner, who's been at it almost 50 years, has had much success. Put him in a new company today versus some kid that's never run it before. You got to bank on experience. I think that's the critical thing that gets overlooked sometimes when we play these things. Where, remember, you know this, and failure's the norm. As great as we think certain companies now look, only 2 to maybe 3 out of 10 will find it, develop it, either sell it to somebody or develop it themselves. And you got to keep that in mind. Buying and holding for years is just not a good idea in the junior resource market.
No, it is not, Peter. And I really appreciate you sharing that. Where can we follow your work, Peter? How can we get in touch with you?
There is a blog, petergrandich.com. There is a YouTube channel where obviously a great interview like this I'll put up, and I do interview some people myself. But I'm really falling in love, and I can't call it X. I love Twitter. I can't imagine, you might have gone back to the days when we used to have to print the newsletter, typeset it, fold it, print it, put it in the mail. 3 days, 4 days later, people would learn what we're thinking. Now, in a matter of seconds, the world can know what we're thinking. So I spend a lot of time on Twitter.
Oh, appreciate that, Peter. Thank you so much for sharing that. And of course, I follow you on Twitter as well. And thanks so much for your time. It was great catching up again, but it was long overdue. It's been 12 months. Let's make sure it's not 12 months again before we catch up. And
I'll be glad to. Thank you. I enjoyed it very much. God bless you.
Fantastic. Really appreciate it, Peter. And let me do my outro. Everybody else, thank you so much for tuning in. I hope you enjoyed this conversation here on Soar Financially with Peter Grandich. What are your thoughts? How are you positioned? What do you think about the miners? It's something I really want to hear about. And have you signed up for Deutsche GOLDMESSE? Are we going to see each other in Frankfurt next week or this weekend? Sorry, this weekend, Friday, Saturday. It is happening in person, May 3rd and 4th. We have some fantastic keynotes. Jeff Clark, Brian London, Lobo Tigre, Eric Strand, Joanna Punica, and a good friend here from Germany, from Der Aktionär, Markus Bussler, are joining us. Are you as well? Make sure to sign up. Deutsche GOLDMESSE or GermanGoldShow.com. Join us in Frankfurt. Be great to see you in person. And we'll have lots more lined up for you this week. It is Fed week, so lots happening. We'll be back with lots more here on Soar Financially. Thank you so much for your time. We'll be back.